All right, good afternoon, everybody. Happy Martin Luther King Jr. Day. I did not participate in the market today. Things are rather slow. The market did open a little bit last night, closed for a little bit today, and then reopen again. Not a lot going on. You can see the day starts right here, right, January 18, and right now is about 5:30 p.m. and this is all the action we got. You can certainly sit there and watch the price action, and if the right setup comes up, you can take it. But I just don't think it's worth our time right now to sit there all day for this much action. Okay? Instead, I just want to take a shot at some 101 stuff, some really basic setup that we're doing. And I don't have any agenda for this. I'm just gonna wing it. If there's something that you want to go in detail in or something you want to talk about, certainly leave it in the comments, and we'll I'll get to it sometime this week or um, sometime in the future. But we're probably gonna have multiple part series for this beginning stuff. Okay, all right, let's get right to it. So what we're doing, we're really scalping the E mini, right? Which is the ES. E mini is just a mini version of the S&P 500 futures. You can see the ticker is right here. And what we're using a 2000 tick chart. What that is that each of these bar represents the previous 2000 trades. Okay. In the past, you're probably familiar with time frame candle bar. If it is a 1 minute, 5 minutes, or 10 minutes, each one of those candle will represent whatever that time frame is, right? If it's a 1 minute, each one of these candle will represent a um, the price action within that 1 minute or within the 5 minutes. The 2000 tick chart represents 2000 trades, so it's a lot more consistent, right? So if we have high volume, high liquidity, you will have bars generating a lot faster, and if it's slow, you will have bars generate a lot slower. Okay, scalping the mini ES. I just typed this in real quick. Okay, so there's ticks and points, right? In the futures market, everything's in ticks and points. Okay, ticks is ticks is a mini increment of points. With the ES only, right? Every instrument has different calculation for this. But for in this is just for the ES, right? There's four ticks and a point. Each tick is worth 12.50, okay? And therefore each point is worth $50. What does that really mean, right? What that means is that hey, when when you get in a position, if you buy a contract, okay, at 37.67, you can see that over here, and it goes up to 67.68, it goes up by 1 point, you made $50. If you sell a contract and it goes down by $1 or a point, you made $50. Okay, if it goes up by one tick, you made 12.50. It goes down by one tick, you made 12.50. Okay, in the direction you want. And if it goes against you, if it goes against you a point, you lose $50. It goes against you a tick, you lose 12.50. It's that simple. Okay, and when you trade stock, when you trade the SPY or you actually buy the S&P, you can, the price can go up by pennies, whatever it is, right? In the futures contract, it only goes up by ticks, meaning that you will not see 3762.01. You will always see it in increments of 0.25. Okay, because that's one tick. So 0.25, 0.5, 0.75, and then a point, 0.25, 0.5, and so on. Okay, so that's how gains and loss are calculated. Okay, and so what we're doing, I'm saying we're scalping the E-mini, meaning that we're only taking advantage of small price movement or price swing to get 1 point, which is $50. Okay, we don't care that it swing this much. Okay, we might later, I will explain with the runner later, but we might, but all we care about is that hey, you know what? If we get in right here, it can end right here. Okay, so let's demonstrate that. If you get in at this location here, you want the price to go 1 point above that. Okay, which normally takes 5 ticks, right? Because of the difference between bid and ask, but that's all you're looking for. Okay, that's all you're looking for. So, because when you're scalping, you want to profit from many of these trade where you can take advantage of the small swings, right? So you have to have a really high probability of success because when you take a loss, it equates to more than one wins. Okay. For this purpose, you cannot move your stop loss. Okay. Let me repeat that. You can move it closer to narrow your stop loss, but you can never make your stop loss bigger than it should be. And the reason I say that is that because you're taking a small win, right? And if you keep on moving your stop loss and make it bigger and bigger, the bigger you made it, the harder it is for you to recover. Okay? How do we determine our stop loss? Right? Stop loss is always 1 tick. Sometimes I see people do 2 ticks below your signal bar. Okay? Always. So um, let me find a signal bar here. So we want to focus on second entries, right? So it looks like this right here is a second entry right here. Okay, so first entry because prices make new high, okay? Price tick up. This red bar right here ticks above the previous bar. So that's the first entry. It went back down and then ticked back up above this bar, this previous bar. Okay? So this bar right here is a pretty bullish bar. We can go over that if you guys don't know what bullish bar is, but this is pretty bullish. So now it is a second entry. So this right here, that right there, no, sorry. That right there will be your signal bar. Okay? Your signal bar, what it is that you will place an order 1 tick above that, okay? And your stop loss will be 1 tick below your signal bar. Okay, so that is your stop loss. For this particular example, 1, 2, 3, 4, you can see that your stop loss is actually 4.5. Okay, 4.5 points, 4.5 points, which is $225, which is huge, right? It's a 1 to 4.5 ratio. Okay, and you can see that prices came down, so you got it right here. So you will pretty much get your scalp on the next one right here. Okay, so you will come out. This one is a winner, but as you can see, you know, I do see a lot of videos on YouTube where as prices move down and people got nervous and they start dragging their stop loss out, dragging it out. And sometimes if the prices goes against you, it will continue to go against you. It's better to just take your loss and recoup with later trades. Okay. Again, second entry, first entry is right here because prices tick back up. I mean, first entry right here because prices tick back up after making high. The same thing with the loads. Let's take a look here. You can see here prices make new low, ticks back up, first entry, ticks back up, second entry right here. So this bar is a second entry, and if you want to get in this one, you would get in right here, okay? And you would still get that. Again, not every second entry is a good entry. You have to have uh, you have to be able to have second entry at a place of value. Okay, support resistant or the EMA or a trend line of some kind. It has to be a place of value before you can get in. If if every second entry is good, it's gonna make you money. Everybody will be doing this. Okay, so um, and again, it's a lot harder. It's a lot harder to do this when the chart is live. That's why you need to practice. I'm still practicing right now, and lately I have a lot of success in it, but I can tell you I'm still practicing, and maybe in a couple days I can start doing real money trading. But as of right now, I'm practicing. Okay. Let's see what else we want to cover. I think I went through the ticks. Um, Again, if you guys want to go into detail on any particular subject, I can do that, right? I do. So th this up here, this up here basically tells me what my risk is. Let me show you. So the previous example, right, we have to start counting what the risk is. So what this up here is that what I did is that I automatically calculate the risk based on one tick above that and one tick below that and calculate how much risk it is, right? So for this particular bar right here, for this particular bar, the risk is $137.50, okay, per contract. And this right here, this current one is also the same thing. Now that particular one right there is 37.50. That way, when I decided to go into a trade, I will know exactly what the risk is. Sometimes if it's over $200, I just won't go for it. Preferably, there's a lot of time where the setup is less than $100 risk. So those are the one that I really want. And if it's less than $100 risk, sometimes I'll take a little more risk, meaning I'll be a little more aggressive. Maybe it's not quite to the location or the area that I want to enter, but because the risk is low, maybe I'll do that, right? But if you take a look at this particular risk here, right? Maybe it's not something that I want to take, to be honest. Um, but it is what it is. Now, this particular one here, maybe, no, one, two, yeah, I I don't know. Um, you have to do it live and make decision live and get used to that before you can start trading with your real money account. That's what I recommend. Okay, so I'm losing my train of thoughts here, but again, if you let me know if there's anything that we should go into more detail. I'll give it some thoughts later and see what else I want to cover. But tomorrow the market will open. Hopefully we do well again. Let's come back. Let's open up the spreadsheet. Okay, so we're on day 56, right? And we had a lot of success lately, besides these two red days. Um, but we're now 98% to our $10,000 goals. Once we hit 10,000, we can start thinking about real money trades. Okay, I'll go over that with my account size and how many contract I should be doing. But I'm really excited and nervous at the same time, right? Because we've been doing good on stimulated trading, but once we start trading, doing real money trading, right? Our mindset is going to be a little different, right? We might make more mistakes then because we're a little more nervous, but anyway, I'll see you guys tomorrow. Just remember, if there's anything that you want to discuss in more detail, just drop it in the comments. And thank you for watching, and like and subscribe.